if you're a concentrate producer, which many mining companies are, you're producing this pile of black powder that contains all kinds of different metals, and you're shipping it over to some refinery or smelter, pardon me, in Korea or China or Japan or wherever it's going. And that refinery or smelter is not going to ship you back the metal. They're going to keep it in their own account, and you're selling it to them. So there's no hope that mining company, and they wouldn't pay the shipping cost anyways, even if the smelter agreed to ship back the silver or the gold to North America, the cost would be prohibitive, so it wouldn't happen. So that doesn't happen for most of the mining sector. For us as a doré producer, it's quite simple because we're producing a block of silver, which is basically 95 to 97% silver with a little bit of gold in it and some other metals. And that gets shipped to refineries in North America. So it doesn't leave the continent. And these refineries spit out 1,000-ounce commercial bars, and we put it in our warehouse.
In today's news recap, silver price finally breaks free. In the early hours of the silver market on Monday, we have seen a lot of momentum, and as a result, it is worth noting that the silver market has cleared a major short-term barrier to perhaps run higher over the next few weeks. The silver market rallied significantly during the early hours on Monday, as we are now well above the $31.50 level, an area that I had been watching. We're also fairly well past the 50-day EMAs, and now it looks like we are starting to finally see some momentum coming into the market. Underneath the current trading area, we have the $30 level offering a massive floor in the market, and we had recently formed a bit of a double bottom. This is a good sign, and it's very likely that silver will find that as your hard floor going forward. There's also an uptrend line that supports silver, so the technical analysis all lines up for higher pricing. The question now will be about inflation in the United States. Will it work against silver? We'll see. But also, the silver market is also an industrial demand story as well. And if the economy really starts to take off in the U.S., silver demand could pick up there as well. So it's a bit of a cacophony of noise, if you will. Nonetheless, the simplest way to look at this chart is that we've been in an uptrend for quite some time. And now it looks like we're going to at least attempt to continue that uptrend. This uptrend is likely to be a bit surprising for some, but when you factor in the idea of the overall trend, as well as the idea that liquidity could drop in a week or so, things could get interesting. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment, because we're offering an exclusive discount on Nordvpn, an essential tool for gold and silver stackers who value privacy and security. For just a few dollars a month, you can safeguard your online activity and protect your financial research from prying eyes.
So, we're seeing demand right now of around 1.2 billion ounces of silver, and this is an estimate for 2024. I've heard numbers as high as 1.4 billion ounces of silver consumption expected in 2024. These are pretty substantial, numbers that we've never seen in the history of the silver market before. As it says on the slide, there's over 10,000 uses of silver, and the crazy things like yoga clothing, soles of your runners, paints in hospitals, linens in hospitals, filtration systems. Of course, when going back to the 80s, when silver was primarily used in the photographic industry and the photographic industry went electronic, there was a lot of silver around, because all of a sudden this one industry that was consuming 25% of the world's supply of silver disappeared. And then I noticed that being, at a copper company in the early 90s, and when I put First Majestic together in the early 2000s, I put it together because of the thesis, because I was seeing electronic usages increasing dramatically, and I expected that was going to continue. And that thesis has paid off quite nicely. And the last bullet there, and this is something that is some people don't. We heard the nuclear story on the prior presentation, but 80% of the rods within a nuclear reactor actually is silver. And with the new renaissance in the nuclear industry coming, we're going to see another big driver of silver demand over the next decade, which will be quite interesting to see. And here we've got two industries, the EV and the photograph or the photovoltaic industry, solar panels, consuming almost 300 million ounces of silver. And we're producing 830 million ounces of silver as an industry. And these two industries are consuming about 40% of the market. So they've replaced photography by twofold, basically. So the above ground supplies back in the mid 80s was about 5 billion ounces of silver sitting on the surface of the earth. Today it's estimated, and there's a slide coming up, that there's about 1.2 billion ounces of silver left on the earth surface. So pretty interesting. So this is the total supply, and you see that mine supply has been basically flat, slightly negative. We did have a peak back in 2016 of 880 million ounces. Then in COVID hit, we broke through 800 million, and then we had a recovery. Recycling has basically been flat. There's no money in recycling. Your cell phone has $3 or $4 worth of silver in it, and it's going to cost a recycler some multitude of that to even try to take it out. These technology companies of the world are very good at embedding copper and zinc and silver in these circuit boards, and it's almost impossible to extract these metals out of these computers and televisions and refrigerators and microwave ovens and all the different things that are part of our daily life to get these metals out of these components that we rely on and consume on a regular basis. So. And what is future demand or future supply going to look like? Well, over the last 10 years, it's been flat. What's the next 10 years look like? You see worldwide grades dropping among the silver sector. Our grades at First Majestic have been dropping over the last 20 years since I put the company together. I see it all our peers, the same thing. For the production from all the major silver producers on the planet has been flat and or negative. And what's it going to take? Well, Hecla came out with a number just a few months ago that it takes 17.9 years to build a mine from discovery to first production. And that's a shocking number. So if you're ever going to see this number increase, what are you going to have to? First, you're going to have prices go up dramatically because the mining sector is not going to make the investment necessary. The mining sector is still in shock from 2011, 2012, where the mining sector thought that the metal prices were going to continue higher. Silver was 2011, silver was $50 in April. In September of 2011, gold was almost 1900. And the M&A activity in 2011, 2012 was quite paramount, and it hit a peak. And then over the next 3 to 4 years, all those mining companies wrote down those assets almost to zero, and to zero in many cases. And the mining sector was highly criticized for buying assets that appeared to be at the top of the market. But the mining executives at the time were being told by the banks that silver was going to go to $70 and gold was going to go to 3,000. Of course, it didn't happen. The metals, silver retreated to 12 from 50, gold retreated to 1,000, and the mining sector was highly criticized, as I said. You're not going to see the mining sector do that again. And this is what is going to happen with supply. So to change this number, you're going to need to have triple-digit silver probably for a decade to make any difference in supply, which is pretty shocking. So in an environment where we're already in a substantial deficit and you got the nuclear renaissance happening, what's going to happen to prices? Where's the metal going to come from?
In the continuation of the episode, Keith Neumeyer shares how First Majestic is strategically positioned for the growing demand and bullish outlook for silver. With silver consumption expected to reach historic highs in 2024, industries like solar energy, electric vehicles, and even nuclear power are driving unprecedented demand. First Majestic is leveraging its expertise and infrastructure to capitalize on this opportunity while while addressing the challenges of flat mine supply and rising deficits in the silver market. One of the key moves by First Majestic is its investment in an in-house mint. This initiative not only ensures better control over its production, but also allows the company to bypass the inefficiencies of traditional refiners and mints. By converting their silver into coins and bars directly, they're effectively taking millions of ounces of paper silver out of circulation, strengthening the physical market. This approach reflects a long-term strategy to build value and resist market manipulation that undervalues physical silver. Keith also emphasizes the company's commitment to sustainability and efficient production. With high-quality assets and a focus on innovation, First Majestic is well positioned to meet rising industrial and investment demand. As the global economy transitions toward green energy and electrification, Keith remains confident that First Majestic's proactive steps will help it lead the way in a market primed for significant growth. Now we'll show you more clips of the latest presentation, but first, smash the subscribe button and check the pinned comment. Let's get back into the episode.
So these are the deficits that we've been experiencing over the last few years. The 2024 number is an estimate, of course, but nevertheless, these are substantial deficits. We don't know where this metal is coming from. There's lots of guesses where it's coming from. Speculation that maybe it's coming from Russia. India is a big buyer. China is a big buyer. It's illegal for China to export silver. India is planning on building the largest solar farm in the world. They're going to need a lot of silver for that. Maybe that's why they're buying so much right now. Their Q3 silver consumption was the biggest on record. I think they imported something in the order of 75 million ounces of silver in that quarter. Pretty staggering number. So this deficit's not expected to change in any way, in the foreseeable future. I'm a big believer of the ratios. As you've heard me many times, I'm a triple-digit silver guy. I came up with that term, over a decade ago. People have copied my term, and it's nice to see. Maybe eventually I'll be right. We'll see. It's interesting that Bloomberg, you see this as the source is Bloomberg here, but it's interesting that they started in 1988. I don't know why they did that, but you see in 2011 there, when silver hit $50, the ratio hit 36. The average over this period of time, it shows 70, which I think is a little bit high, on the high side. I think if you went back to 1974, which is the beginning of the COMEX paper market, I think this number would be quite a bit different. I'd love to see that slide, and maybe we'll try to figure that out for my next presentation. And going to inventories, as I mentioned earlier, we had 5 billion ounces of silver sitting on the Earth's surface back in the 80s, and this is commercial bars. This is when I mentioned inventories. This is 1,000-ounce commercial bars. This does not include silver jewelry, does not include private investments. It doesn't include your 10-ounce bar in your home. Okay, this is commercial silver. So in the LBMA, it says quite clearly 1.2 billion ounces, but most of that, about 1 billion ounces of that, is actually held by ETFs. So it's not even available for the market if it was anyone wanted to sell it, because obviously it's not for sale. And something I love to talk about is the paper market. You've heard me rattle about the paper market, I'm sure, many, many times over the last 20 years. But the market trades, as it says on the slide, 190,000 contracts a day, which is the equivalent of about 1 billion ounces, 950 million ounces of silver paper trade every single day in the market. There's 252 days of trading in a year, and that translates into a ratio of 240 to 1. So for every 1 ounce of physical silver that trades daily, 240 ounces of paper trade daily. It's pretty shocking when you see that ratio. And it's one of the reasons why I'll get into the next. You've seen this slide already. This was in my prior presentation, so I'll just skip that. But this is why I opened up a mint. There's a couple of reasons why I opened up a mint, because out of frustration, quite frankly. We started selling silver to the retail public in 2008. And it got to be quite an interesting looking business, back, 2021, 2022. And the mints just wouldn't supply us the metal that I wanted. I kept shipping them dory bars, well, not dory bars, but refined 1,000-ounce bars. And they were sitting on their floor for months and months and months. Like, we would wait 6 months for a mint to send us our refined, our 1-ounce coins and our 5-ounce bars and so on and so forth. And it was quite frustrating. My finance department, my CFO, was frustrated because the amount of inventories that were building that was outside of our control. We actually had one of the mints go bankrupt on us, and we had $8 million worth of silver sitting on their floor, and the banks moved in and claimed it was their silver. Right? And we go and Pan American had, I forget how many ounces now, I think about 12 million. Tiffany's had about 40 million ounces, $40 million on the floor, and the bank seized everything. And we all had to go to court, and we've got back about 80% of our money, but we did, have that loss. So, we don't want to have our metal sitting on other people's mints, and that same repeat occur. So I decided to open up our own mint. So we started the process last year, and we turned it on in March. We started producing bars, and then we just turned on our coin machines, and that coin that you can see, it's on the next slide. We're now producing coins as well. So it's a pretty exciting part of our business. And what does it do? Well, and the other reason why I did it is because of this 240-to-1 ratio. If you do the math, we're hoping to get about 10% of our total volume through this mint in 2025. Right now, we're at about 5%. So at 10%, that works out to about, and if I get these numbers wrong, hopefully Manny can correct me, but so that's 240 million ounces of silver equivalent in the paper market that we're taking off the market. So we put 10% of our production through this mint. We're effectively taking 240 million paper ounces off the market, which is pretty, substantial. If we if we can get 100% of our production through this mint, which we're hoping to achieve, it'll take some time to get there, but assuming we do get there, then that would be the equivalent of 2.4 billion ounces of paper silver we can take off the market. Pretty interesting. Think that'll drive the banks crazy? I hope so.
What do you think about Keith Neumeyer's predictions and the bullish outlook for silver? Do you agree that First Majestic is well positioned to benefit from the rising demand and potential supply shortages? Or would you rather stick to stacking physical silver instead of investing in silver mining stocks? We'd love to hear your thoughts. Drop a comment below and let us know how you're navigating the silver market. If you found this video insightful, don't forget to give it a thumbs up, subscribe for more content like this, and hit the bell icon so you never miss an update. Thanks for watching, and we'll see you in the next one.